All right, hello and good morning, everyone. Today is Wednesday, August 12th, and I'm Michael Boutros. Welcome to this live intraday strategy webinar on SB Trade Desk. Bernard, Chintan, Dale, Daniel, Eileen, Enrique, great to see everyone here in the room. So, what a night it has been. China moving to devalue its currency for a second straight day. Not as much, obviously, but you did see a very strong reaction at the fixing at the open of Asia last night, right around 8:15, or rather 9:15, 9:30. You saw the market really start to push. Dollar rallied right towards the highs, and then we reversed course. So dollar CAD set up from the last or from the start of the week still is in play. Downside was in move last night. Was a beautiful play there. You had sterling CAD with a very similar move, taking advantage of not only that CAD strength but also some of that sterling weakness we've been seeing. Um, and the other one that actually played out really well, guys, was Aussie dollar and Euro dollar. Aussie has been invalidated once it broke that low yesterday that we talked about, but we're back on the long side there. So we will take a look at some of these setups. As always, feel free to throw out questions, trade setups, specifics on strategy, guys. No question is out of play here. So let's jump in. Relative performance before we get started for the greenback looks like this. You're weaker against all your major counterparts. Swissy, interestingly enough, someone here in the webinar asked about Swissy earlier in the week. That was coming into a major confluence of resistance on dollar Swiss. Seeing the Swissy here with the strongest move up 1.5%, excuse me, as far as the pullback is concerned there. Kiwi dollar up 1.3. Haven't really gotten involved there. CAD, second or third best performer, up 1.09, same as the euro dollar, and both of those have been in play. Aussie with a gain of 0.9, a little bit lackluster on the sterling and yen. So what exactly happened overnight? I don't really want to stress the fundamental side of things, guys, because the play was pretty clear. And today's lesson, if anything, was that stick to the technicals. We went over all these setups yesterday in the morning. The dollar, although it did rally on the initial result, really didn't invalidate the setups that we've been following, and in fact offered a beautiful entry both on the dollar CAD and on the sterling CAD. So we'll take a look at those in a moment. All right, let's delve right in. Before I do get started, I just wanted to go over some of the data that we got in overnight trade. UK jobless claims came in. It was a mixed print, okay? A lot of people are interpreting some of the breakdown of the data as not so constructive for the UK labor markets. However, on its face value, it was a pretty decent read. Jobless claims dropped by 4.9 thousand. We got an upward revision to the previous month, down to just 0.2 from 7,000. These are jobless claims, so new claims. ILO unemployment 3-month average running at 5.6% as expected. There was some concern about the weekly average earnings continuing to be lackluster at 2.4%. Remember, one of the main things that all these central banks are trying to stoke is wage inflation, as that will inherently cause a pop-up in aggregate demand. And again, that's fuel for the economy. So mixed data out of sterling, but nonetheless, broadly on its face value, still constructive. You did get the industrial production numbers out of Europe, which were weaker than expected a couple hours later, or half hour later, at 0.4%. Not enough to stop the rally that we're seeing here in the euro. And this is what we're looking at across the board. So let's jump into the scalp setups from yesterday first, and then we will jump into the majors. Let's just jot down here where we're starting. Okay, first things first, dollar CAD. Here's what dollar CAD looked like as we came into, this was pre-China release. So the rebound into support, into the lower median line parallel that we were talking about yesterday in the webinar did hold. Remember, 29.56 is still kind of the break that we want to see to validate the turn here. It's a basic 236 off the low and would necessitate a break of this lower median line parallel. Here's what dollar CAD looks like right now. And Eileen says, yes, still running with that euro. Nice, Eileen, nice. Yeah, we'll definitely take a look at that. So we're testing that level right now. The pullback, again, coming into this area of support, 129.56. Today's low so far was exactly 129.51. So we're right at that level of support. You could see a rebound from here heading into the U.S. trade session. But if you do break, the downside targets are pretty clear. And these are the levels that we highlighted, first on Sunday. And then again, we updated it here last night. 129.58, that 236. Below that, you do have the median line, which we're testing right now. Subsequent targets on 129 and then right down into the lows at 128.59. Objectively, on a wider range trade, guys, you're looking for a drop all the way down to 27.70, 27.97 if this breaks. And that's a very strong if. Right now, coming into the U.S. session, you're at support. So if you're not already short, we'll be looking to sell rallies. Here's what the intraday chart looks like for dollar CAD. And here's what we looked like last night. So again, that China data offering, or that China release offering another rally right into the upper median line parallel. It was a perfect entry. The stop on this trade would have been against the opening range high for the week, which came in at 31.76. The high was right around 31.50. You're looking for about 30 pips per scalp. Looking to the downside, initial target, and where we would have taken off half of the position would have been right here at 30.50. Stops at break even. Final target would have been here. We're testing, like I said, that 236, that median line right now, so you could see a little bit of a pop here in U.S. trade, but we'll be looking for short triggers. We'll be looking for resistance to sell rallies while below 30.50, which is, again, that swing low from Friday and the 618 of that range for the week that we made yesterday. So still looking on a downside move here for the dollar CAD. This is make or break it. It's that 129.50 level. If we get through it, look for a broader downside correction. A 100% extension off the highs still takes you deeper into the 128 handle. So either way, there is room to the downside if this does finally make a move through support. And it's interesting because the initial reaction, guys, and if you already heard a lot of people talking on the financial publications, everyone is saying this is going to be dollar positive. And certainly on the longer front, the dollar positivity is probably not going anywhere. But near term, exactly what we talked about in the webinar is sort of the discussion that you're starting to hear. In the fact that this will tie the Fed's hands because you're seeing the dollar strengthen on this move. We've already seen continued strength in the greenback, and move in interest rates will only propagate that further and makes this much, much, much more complicated. So if those interest rate expectations from the Fed start to get kicked out more, which they're likely to, irrespective, keep aside all things that China is starting to ease. Why are they easing? It's because of slowdown in the broader market there, and it's the second largest economy in the world. So if the second largest economy in the world is seeing a slowdown in growth or economic, or the economics are slowing down, and then you see Europe, which still has its own issues with Greece and all this, it's still being fixed out. You have central banks like BOJ, which now has to compete to further stoke inflation with this move. You're going to talk to the Fed's going to start moving higher on rates? It's a really tough conversation. So put that aside. Let's follow price action. Dollar CAD, watch for support at 129.58, 129.50. A break below that really solidifies, and a close really solidifies a larger turnaround here in the dollar CAD. And we'll be looking to sell rallies essentially below that median line, but near term, it's going to be that 30.50 that'll invalidate the shorts. Any questions on dollar CAD? Already 200 pip ATR on dollar CAD. Yeah, so the dollar CAD, Mark, the ATR has really started to pop up. I'm not sure which ATR you're looking at, but the 20-day rolling ATR is now at 113. Remember, a quarter of the daily ATR yesterday was somewhere around 27 pips. You're now in the range of like 32 per scalp. So looking a little bit wider here as we see the ranges start to blow out on the back of that stuff yesterday. Oh, he's talking about just the average range, or just the true range today. He's talking about 200. Yeah. I wouldn't put it past anything, Those aren't barriers of entry, Mark, right? We can blow out into a 400 pip day. There's nothing to stop it. But irrespective of that fact, you are at support, right? So I wouldn't be surprised if we do consolidate in this range, or at least pop up near term from here. Make sense? He says, good, LOL, because I'm playing a pullback. Well, you did it at the right spot. If we're going to see it, it should be here. It should be here. All right. So if there are no other questions on dollar CAD, we'll move on to sterling CAD. Hey, Dan, for sure. We'll take a look at sterling. And I actually haven't taken a look at it this morning, but I see a couple other questions. Mark's looking at it too, Dan, so we'll definitely take a look at that. Let me jump really quick into the sterling CAD setup from yesterday. So again, a play on CAD strength, which is sort of against the norm. Nobody likes that trade, which is kind of why I've been pressing it on the intraday scalps for the last 4 days. I think it's pretty clear. Here's what we're looking at yesterday on sterling CAD. This was on the radar charts on Sunday. You saw the rally take it right into the median line and stall, giving us a clean opening range. B, we've tested the opening range high now for the week. And C, Momentum still shows divergence, right? The momentum rally here in price was nowhere near to move higher. So it still looks tired. It still looks tired on the long side. Here's what sterling CAD looked like as we came into trade last night. This is post the China release. And post the release, it was right at support, a median line off the lows. And you saw that rally right into the upper median line parallel / the 618 retracement of the weekly range. And that's where we held. Here's what sterling CAD looks like on the intraday. Okay, so in fact, that rally right into the highs was the last chance to get back in. You got another rally here that gave you a beautiful risk to reward ratio, momentum break, taking a short. Again, I tried to warn you guys, the ATR here is much wider than the other scalps that we've been looking at. So a quarter of the daily ATR last night was only about 43 pips, or was at 43 pips. Looking for a concerted break below 203.88 to get this going, and he got that a couple hours into the European trade session. So targets that we noted last night, we're down into what was that, 230.10, which is a 618 retracement. And then here's the lows for the week, the opening range low for the week, and that's right at 202.65, 202.60. So again, near term coming into support. If we do break above this region in US trade, you could get a little bit more of a significant pullback. On a real near-term move, basic retracement off the high will serve us best here. Looking for the 50, looking for the 618. And if we draw this properly, you should see some overlap. 618, 50, yeah, right there. So if we do break above this region near term, I really wouldn't stress the 50 as much as this region right here, which is the initial opening range high. And those swing lows around 203.88, and we'd look to reinitiate shorts. Long story short, right now you're still bearish below 203, 203.15. Downside break, you didn't really get the target yet. It was right here at 618. It's an extension off the high, 202.16, and then into this confluence region at 201.50, 201.55. I'll just drop a marker there for you guys. So no change to levels from last night. The only thing that you want to keep into account is on a rebound off of this level right here, which is where we're trading right now, look for resistance back at 230. If that breaks, you could see a little bit more of an upward stretch here. But as long as we hold within the confines of this formation, we'll be looking to sell rallies. We'll be looking for short triggers in momentum. So another really nice scalp, a little bit larger of a range. Again, if you're newer to the strategy, you might want to be a little bit more cautious on these larger range scalps. If you've been doing this with me for a while, this is our bread and butter. This is sort of where the meat of the market is for us. Any questions on sterling CAD? Looking for another rebound to sell here. Watch for a trigger break above 30. If that moves and we do see a move above 230, I'd be looking more towards 203, 203. If we move through that and momentum breaks through 30, I'd be looking more towards 203.50, 203.80 for possible reentry again. Event risk on the pair, pretty limited into the end of the week. Yeah, you don't really have anything from the CAD side of things on tap. You do have new home prices tomorrow, not likely to be a major market mover from the Eurozone. You do get those GDP figures into Friday, which is likely to be the major player there. There's going to be the advanced read for the second quarter. So the Euro pairs will be on tap. From sterling, you're pretty limited. The unemployment rate was pretty much the biggest print for the week. Obviously, U.S. retail sales on tap tomorrow morning. We'll be covering that in the webinar, but should be pretty limited, the impact for this pair. Okay, so that is the two scalp setups from last night. The previous day, we did also have highlighted the Aussie. I will go over that in a moment as well. Well, let me just remind myself real quick. And the Euro setup, right? But before we do, I do want to take a quick jump into last night's radar chart on the dollar yen, because this is a trade that it's a fake out here. And I think we need to be very, very cautious about what's going on. So if we take a look at the dollar chart, or the dollar yen chart, it's been on the radar because I didn't really want to be operating on this. The premise here is that the break above 124.13, 124.35 was a shift to the long side. We continue to know over the last couple of days that momentum still holding 60. That's something very indicative of false breaks. But Price was still above 24.13, 24.35, and in fact, when we came back and pulled into that region, start off the week, it was a very, very clear rebound off support. So you saw the upstretch on the release, and one of the main tells was when the release came out and the dollar started surging across the board, dollar yen couldn't catch a bid. It did move higher. We stretched into a new high near 125.25, but it quickly failed, and the result turnaround takes us right back into key support and the bullish invalidation level. So we're right back to where we started off of the week. It's very important that we take note of this. If we break below this level, this sliding parallel has been in play from the lows they made here in May. Every sail through of this slope has been met with either a pretty concerted rebound or a much, much more significant, meaningful breakthrough. So we'll be watching for this today. You have a huge confluence region here of not only the 2007 highs, but also the 1618 extension off of the lows from December. You also have the close highs from July, the stretch highs from June that you made late in the month. And the monthly open at this point comes in right around 123.80. Okay, so you're coming in some pretty critical levels for which I don't care what anyone's saying about the BOJ. If this thing breaks, it's a done deal, okay? This thing couldn't break 60 for the last 2 months on the upswing here in momentum. And here we are, outside reversal candle at the highs. That's something I'm paying attention to. So just to put things in perspective, right back at support, today's close for dollar yen will be paramount. Here's what it looks like on the 30-minute chart. Although we're not scalping it, here's what the chart looked like. So some new analysis on here. We had a pitchfork earlier in the week, guys. We were working with the last 2 peaks here. If we take the new peak that we made in overnight trade, it puts resistance near term right into this region, 124.35 again, which is the same thing that we're looking at right into this region here. So again, could get a little bit of an upswing here. I would like to stay bearish dollar yen below that 124.40, 124.35 region. And you really need to see a break, zoom this out for you, of this region here to really get the validation. And if it goes, look for 23.50, the swing lows, look for 23. And you have some pretty nice levels on the downside here if it finally pans out. So a little bit late on our call here for some dollar yen weakness, but objectively, you're struggling here, and you've made a very clear opening range for the week. And a lot of these trades, that's all they've done, guys, is objectively break the opening range. If I can just shift your attention right back real quick to the dollar CAD. Monday, stretch into a high, Tuesday low, test the highs, break the lows, stay bearish below the lows. Sterling CAD. Weekly opening range clear and set. You're waiting for a push and a more validated break below this support, and that's all it is. A very simple, objective way of looking at price action. So on a lot of these pairs, we'll be looking for that conviction heading into the latter part of the week. Obviously, the retail sales figures out of the United States will shape a pair like this up, dollar yen, which is very, very notorious for reacting to U.S. data. Any questions on dollar yen before we move off? Mark says, oh my God, I think so too, dollar yen, fake out, price action was telling / weird. Yeah, again, I mean, even on the stretch here for China, right? You saw Aussie getting slammed. You saw CAD getting just slammed, and then dollar yen just barely trying to break through that 25 barrier. You open up even ahead of the European trade session, this thing just completely falls apart. So watch for a break of support here into the close of session today. He says that could be telling that the US dollar might go higher, says Mark. I don't know if I agree with that. You know, here's what the dollar looks like, guys. Let's go over it, Mark. So since the start of the week, we've been looking at 12,071, which again, I'll remind you is the reversal day close that we made here in April, right after the yearly high. That was the exact high for the month. So that was the opening range high. Opening range low for the month was just below this. It was right around 11,989 was the exact level, or 987, excuse me. A basic 236 was 991. and then you had that median line region here, which was acting as some support. So we're objectively looking for a break of this range. So today, Mark, if this closed below this region, I'm more inclined to favor the shorts, for sure. And in fact, if you look at the momentum signature, again, you can't make any assumptions on this until we see today's close, because all oscillators are only pegged once that candle is closed. But again, if we see this, yeah, it's a 3-month momentum support trigger that also looks like it's ready to break. So I would suggest, we've been looking for this turnover for a while. It's not the expected reaction, which is why I actually have a little bit more confidence in it. But price action is the biggest tell, right? And that's what we follow. And if we close sub 11,991, he says if we close again above 11,991, Mark, I would definitely get more skeptical about most of the moves that we're seeing. 100%. Wouldn't necessarily shake me out of all of them, but for sure, if we close back above 991, that would be a tell. Absolutely, that would be a tell. Here's what the dollar index looks like on the 30-minute, by the way. Okay, and it's just, again, here's an objective weekly opening range. Here's your weekly open. You set the high, set the low, test the lows, test the highs, failure, break of the lows. Objectively, you want to stay bearish below this region, right? Now, again, you could get a rebound. It is a wider range that we've snapped into. That snap back into U.S. trade could take us a little bit higher through it, but broadly speaking, sub 12,000, you're looking lower. The close needs to be below 991. I agree with that. Mark says, okay, thanks. Cheers on that, Mark. Good point. And it's very important, guys, when we're looking at these moves, especially on these breakouts and these moves that are invalidating some biases, or validating, rather, I should say, our biases, we want to make sure on all these trades that we know what the invalidation levels are. So if that market does start to reverse heading into U.S. trade, I'm not sitting there waiting for this thing to pan out as things are starting to move more against me. So if there are any questions over any of the invalidation levels we went over today, keep that in mind. But broadly speaking, things are panning out pretty well. All right, so that is the dollar CAD, sterling CAD we went over, dollar index we went over. Let's take a look at the euro. My man, the euro. So this was highlighted on the previous day's scalp report, and we were moving with the assumptive. We talked about it yesterday here in the webinar with the assumption that this was a breakout. Now, here's what it looks like on the 30-minute. I haven't updated the levels just because I want to show you exactly what we were working with here. So here was the euro on what is this, Monday night. And 110.45, if you recall, was the validation for the upside bias that we've been working with. The invalidation level was right here at 109.30. So we never got into that 109.30 after that press. Okay, we actually pulled right back. We completed, this was a basic 236 of this move. We rebounded off that region. Momentum held at 30. We talked about this yesterday. And then the rally took us right through 110.45. and then into 110.82, and that was almost the exact high. This was, we went over this yesterday, the stretch high that you made here for July. Okay, soft target. China comes out, things start to fall apart. This thing, the entry for me, or where I was looking for a possible re-entry, was right here. You didn't really get it yesterday on that pullback. Here's the China release, finally broke through 110.45 again. That was the sort of play to keep the upside focus in play. If you didn't catch the initial breakout, you had quite some time here because the breakout really fizzled out quick. The dollar strength here, again, was a very strong tell. Aussie's going through the floor. Kiwi was going through the floor. Euro dollar, little blip on the screen. Okay, so this was another tell in price action that the broader move for the dollar strength was not going to hold steady. And with the momentum bounce at 50 on the break to the upside, this was the entry here against the low. So again, you're looking for 28 pips on this one, 1082, 111.21, and here we are with a completion of an exact 1618 extension, or excuse me, 100% extension off the low, 111.68, and that's what's holding right now. Note that up here, you also have that median line right off the lows, which is currently in play. So dollar yen at support, dollar CAD at support, euro dollar at support to open up the US markets. You know exactly what the play is, guys. On the top side breach, 1195 is the 618. I mean, honestly, if we get through this, there's room. There's room for the euro. But this is going to be a near-term kind of key resistance I'll be looking at. So finally, we asked for some volatility. Here it is. Thank you, China. Again, I'd obviously rather trade markets that are not so absolutely schizophrenic with all these comments and all these central bank interventions really charging these moves. It makes for very hard trading conditions, guys, because you never really know if the reaction that you're seeing is because someone came out and said a comment and you want to fade it, or if it's something that's really a material shift in what we expect moving forward. While the China precedent here is huge, okay, and the implications are quite massive for what that means, we've heard a handful of comments come out of the PBOC and overnight trade. And one of the main comments that came out was this is a one-off event. There's not going to be continued devaluation in the yuan, and it's not based on any specific economic conditions. So they basically blanketed and pillowed the whole move by saying we're not doing this out of panic. It's not any specific economic conditions that charged it. And at the same time, we're not going to continue to do this. So don't expect that this is going to be an ongoing devaluation program. So the initial gunshot reaction that the market gets will be faded, guys. It's just like that. You're not going to see a nuke go off and then an explosion, and all of a sudden random explosions go off. No. The nuke is going to go off. You're going to see a massive explosion. The market will slowly digest what that means, and we're off, business as usual. So keep our eyes focused on the technicals. I think things are starting to get really clear. Euro dollar is one of our favorite levels. I was talking about this with Jamie last night. I really do like this setup. I think you continue to see some strength here. Near term, immediately off this resistance, some pullback shouldn't be surprising, okay? But broadly speaking, the breakout that we noted yesterday on the daily chart, especially with that trigger already in play, looks pretty legit. Looks pretty legit. Any questions on the euro? Again, here's a quick look at what that looks like on the broader term, if anyone wants to take a quick snapshot of that photo. All right, that takes us through the majors. We can take a quick look at the sterling just because we've been following it. The pullback, the only thing I liked off of this reaction for China, for sterling, and the only play, in my humble opinion, that was worth playing was a short against this slope line. We've seen it, essentially govern the last 5 attempts to break out. You were getting some ongoing divergence into those highs yesterday. So on a rebound into this, when China came out and the dollar strength, this is actually where you saw one of the stronger reactions. Not as much as the calm currencies, obviously, Aussie, Kiwi, and CAD being. But certainly you did see that dollar strength slam the sterling right into support. So the only play here for me was the move into support. I don't really think you had a very compelling long trigger off that support. And here we are looking to break resistance. So not really looking to do anything with the British pound yet. I also just want to bring your attention to that slope line, the support line off the lows for July, now still holding as resistance. A retracement off the high here has offered little to no guidance in price. So we really want to focus more so on the technical formations on this one. And if we see a break of these highs that we're making right now, basically look for the monthly high to be the target for sterling dollar. The major key resistance that you would need to break through would still be somewhere in that range of 157. And that's a 618 retracement of that entire decline. So we'll keep this. Might be worth putting on the radar charts tonight, guys, to watch. But sterling, definitely of the majors, the least favorable for intraday price action post-China. All right, let's jump into your questions here. I see some interesting pairs I want to take a look at. So sterling yen for Mark and Dan. Let's take a look at what sterling yen is doing. Well, you have the outside reversal day. And The August open is offering some support, still 93.57, 93.58. Let me just snap these lines real quick. Okay. Okay. It could be the onset of something. For the record, I'm a big bull on sterling yen long term. I don't really intraday trade this unless there's a very, very compelling setup, which we haven't seen in a couple of weeks. Actually, on the upstretch there off that June low, I remember we covered it with a couple of different scalp reports. But right now, I think it's too hairy up here, guys. And specifically, I like the yen strength. Okay, yen is in support. Dollar yen is in support. So near term, you could see a rebound off this. But my problem with this, guys, is the sterling. We just haven't gotten the breakout in the sterling crosses. A lot of the crosses look like they are turning over. Don't get me wrong. Sterling CAD was one that we've been playing. Sterling Kiwi, Sterling Oz, right? They do look like they're seeing some downside and they're coming into some support. Sterling Yen right now for me, I really don't want to mess with it unless we get below that monthly open. This region right here, essentially where we are right now, what we tested earlier today. So if we get through that 93.57 barrier, sure. One other thing I don't like about this is that you're right smack in the middle of the monthly opening range. So here's your August open. You set a high, you set a low, you tested the high and fails. The low is not even until 92. So you're sitting right slap in the middle of the range. Momentum, yeah, it starts to look like it's turning over. It's holding sub 60. Again, hallmarks of a possible turnover and momentum, but price action hasn't validated for me yet. He says you can't be objective. He says, kidding. Yeah, I mean, I try to be as objective as I can, Mark. Trust me. Especially trading near term, I have no problem taking scalps against a broader bias. But at this point, I would need a little bit more confirmation on this. The one good thing that you're seeing here, at least, is reaction to key levels here. So you have that median line structure off the high, which looks like it offered some support. This is not the July. Oh, this is the July open. So last month's open. This month's open, remember, comes in 93.58. Sorry about that. August open. Near-term support. So if that breaks, nice healthy ATR here, 36 pips per scalp. Not as big as Sterling CAD, but still pretty big. And you've already paired 50% of the move. So this is kind of the levels I'd be looking at. These are sort of the levels I'd be looking at moving into the end of the week. I do like a break below 93.50. If that happens, guys, selling rallies right into 93, right into 92.36. Last month's open, sort of this region down here would be a nice move. But for me, I'd be very mindful of that support. And remember, this is still just the stretch of the opening range for the month. We failed the highs, which I do like, but you're right slap in the middle of the monthly range. So it could be a nice turnover. Based on yen strength, I like it. From the sterling side of things, probably not my favorite scalp. Dan, do you have any questions on sterling yen, or Mark? He says it's okay. All right, cool. And Dan, let me know if you have any specific questions on that. It is an outside reversal, so we'll see. Not as compelling, but could be a move here. Dan says, all good. Thanks. Hey, you're more than welcome, Dan. Okay, so we also had a question here at the end. When there is time, can we look at Euro CAD for shorts? Let's take a look at Euro CAD. Euro Aussie is another one I was watching yesterday. We'll take a look at that in a moment, but let me check out Euro CAD real quick. Yeah, so I don't actually have an updated scalp on Euro CAD. Let me bring it up. Might be a little stale here. Yeah, so I haven't really updated this scalp for a while, Mark, on the Euro CAD. I can just tell you from looking at the daily chart, not something I would necessarily be interested in because of all the Euro crosses, this is probably the most critical break here. Why? We've set a simple yearly opening range, okay, for the first 3-4 months of the year, and we're testing the highs. A measured move here, if this is going to be a basic head and shoulders, is being tested right now of the break. And if we close above this region, it is an objective, or actually specifically speaking, Mark, this one yesterday was an objective opening range break for the month. So that would keep the shift, the bias to the upside. Yeah, I wouldn't really be looking to play this one until we get way more clarification on the daily charts here. Quite interesting. Let me see that 30-minute again. He says, "Are true the opening range is monthly." Yeah, I mean the monthly opening range already gave out, but more important, this is a huge level because this is the yearly opening range, and if that gives out, there is lots of room to the upside. Let me just see where the weekly open comes in here. Here's the 9th. Okay, so a couple things that might make this work for a scalp. Okay, I wouldn't be looking to fade too much about it. Is this. You have some divergence into the highs. A momentum trigger break has already panned out, and that would have been this one last night. Could be in play. Don't have the most confidence about it, but could be in play. But I think we're sort of trying to force it here. So this is what I would say on this one. Wait for the close. Here's, by the way, if you're talking about sterling yen, why I'm so constructive. So this is the monthly chart. This is the weekly chart rather that was posted on Daily FX for the yearly forecasts. And here's the start of the year, right? So 2015 opens, you drop into a new low, you defend the formation that we've essentially been in for like 4 years at this point. And this is the upper median line parallel. It's been pretty hairy here for the sterling yen over the last couple of days, but the close has continued to respect this line and pivot against it. So the pullback may be underway. Even if it is, your downside should be rather limited, at least from sterling yen standpoint. So quick note there on sterling yen, but I hope that offers some guidance on the Euro CAD, guys. Let's see if we see some resistance up here, but the close on a daily basis is going to be the pretty biggest ball game changer here. Can you look at dollar CAD, please? Thanks, Nagan. We looked at dollar CAD as the first setup in the webinar. I'll take a quick look back, but we just tested resistance, and it looks like that's still holding. If the opening range for the U.S. session sets up here, that would be actually pretty beautiful. A downside break, like we said, this is sort of the major key support here that we're looking at for dollar CAD. So if we do break below that, there is lots of room to the downside. Near-term targets would be right into 129, essentially. That's an 88.6 retracement, and then to the lows at 128.60. Near-term bearish invalidation, if we pop through 130.50, you'd look for a rally more towards that 131 handle again. So we'll keep that in mind for dollar CAD. But we're at support. We noted that earlier in the session, right? Don't be too surprised to see some upside from here. Same thing with the euro at resistance. Same thing with the Aussie near term at resistance, right? Dollar yen at support. Okay. So a quick look, I noted earlier about the Euro Aussie. This is just something I was checking out last night. I actually took a short on this yesterday. We only got squeezed out like 30 pips, not even. It was like 27 pips before it or into the U.S. session. But this was a trade that we were looking at here in the webinar. I just wanted to highlight it. I don't remember if actually we mentioned it, but it was off this region here. So you had a confluence resistance of a 786 retracement off the high and basic upper median line parallel. Excuse me, on the last two peaks here, momentum divergence, price action pressing into a new high on a close basis. Then you had the oscillator making a lower high. The trigger break below 70 was the kind of the move here to put you in with a stop against the high. And it was a slow burning trade, which we got out of right before the open of Europe, but there was a lot of room. The range was actually much bigger than what we took, 51.50. I think the entry was like 51.47, something like that. You inevitably got down to basically 50.70, okay, almost 70 pips lower. So there are opportunities all over this thing. Just make sure, again, when we're trading counter trend, that we're staying a little bit more nimble. So a position here that worked out pretty well. If you were still holding something like this into the China Open, stops at break even is sort of the only way you want to play it because you're obviously in an uptrend. If we had left the target where, key support was, you would have barely gotten triggered, but again, make sure in this environment, all your targets are in the inside. So if you're looking for a stretch into 58, put your limits at 57, 56. A couple pips is not going to make or break us, but we want to make sure that we get executed, especially in this event-driven market where each comment, each, headline to hit the wires is going to move things. Sharif says, good morning. A little late this morning. Do these get archived? Absolutely, Sharif. Every one of these webinars get archived, so you'll find that on the SB Squawk. We'll tweet it out just a couple of, maybe an hour, 45 minutes after we're done here. Just need to archive it, but it'll be up and running for you. You can review it at your own pace. Good to see you in the room, Sharif. Let me know if you have any specific questions before we wrap things up. And with what we're seeing here in the US dollar, guys, it's interesting because the gold trade that we've been warning people about for quite some time is, in fact, finally seeing some upside. And in fact, if you check out the swing update from last night, Jamie noted that we did see a break of near-term resistance here in sterling. Oddly enough, he actually follows this on the near term more than I do. I'm typically strictly weekly and daily chart guy for gold, but this is a long-term trend line. Okay, long-term trend line that dates back all the way to 2006. You've basically completed a 100% extension off the high. Momentum never broke into oversold territory. In fact, last couple of times we tested 30, you did see a slight rebound. So the broader picture for gold is bearish, remains bearish. The deflationary themes that we're seeing across the globe will continue to keep pressure on this. Outside of a major market correction, this is simply profit taking, simply a reset here, maybe a rally all the way up into 1150 still wouldn't surprise me at all. But near term, that's the bearish invalidation level. So you would really need to see a break above 1155 here to make some sort of meaningful reversal in the gold trade. Other than that, near term, you probably see a little bit more upside. You use that opportunity to sell for a medium term objective back into the lows. So some interesting price action here on some of the commodities. Obviously, crude. You're looking for the yearly low, I guess. I don't know. Outside reversal day yesterday at the lows could mean exhaustion. Looking at the momentum signature, you've been getting ongoing divergence for almost an entire month, about 3 weeks here. Remember, even if the oscillator makes equal lows and price action makes lower lows, that's still divergence. You're looking for the oscillator to not confirm an extreme in price. So again, a commodity, if you're not already short or involved in it, really wouldn't be looking for any fresh exposure on the downside yet. Near term, the bearish invalidation level now drops to 44.27, 44.60. This is sort of what you need to clear to invalidate the short side of the trade near term. All right, so if there are no other questions, we'll go ahead and wrap things up here. Keep in mind, tomorrow we do have the major U.S. release for the week, which is going to be the retail sales print. Sharif wants to take a quick look at the SPX. I don't really have anything new on the SPX, but we can definitely take a look. One thing I want to note, Bernard, was that you yesterday? Someone here in the room was asking about the DAX. And I just wanted to note that we saw that close the day at support, and then we shattered it today. So here's what the German 30 looks like. We closed right at support. We were talking about 11,312, which was the monthly open, as well as the lower median line parallel for the formation we've been following off the lows here. We broke through that today with clear fashion, and there was that target that we talked about yesterday, right? 11,912, former median line resistance. We've already crashed through that as well. Trigger break, as long as we close down here today, which it looks like, at this point, you would need a nasty rally to get this fixed, but it does look like we've even made a trigger break in momentum. So if you're still holding that position, Bernard, it's looking pretty good. It's looking pretty good. It was Bernard. He says, yes, I'm short since 11,610. I remember you were saying that yesterday. Well done, sir. Well done. Watch that 200-day moving average, 10,973. Beyond that, let me just choke this up and see if that 764 comes in close. 1092 or 10,924. But nice move and an objective break of the monthly opening range. So it looks pretty good. Mark, I see your comments there. So you guys have been talking about soccer, huh? So Andrew says, which pair are you most interested in? So Andrew, all the pairs that are always going to be highlighted on the intraday page, specifically in the intraday update, are going to be the pairs that I'm actually, actively operating on. So the dollar CAD, sterling CAD are my favorite two right now. I've been messing around with the euro, really nimble on that. Aussie dollar, we didn't cover Aussie. Really quick, guys. I think we lost some guys already, but here's the Aussie dollar. So listen, yesterday we talked about it in the webinar. The invalidation level was 73.50 for the long side. Once that broke sub 73.50, we were done. Okay, we were not looking for long triggers anymore. In fact, I think, Mark, we were talking about this right here. You were thinking about taking a long position, and as long as we held below that region, it's done. It's done. Okay, it was a break back into the median line structure. We've been following off the highs, and we were no longer looking for long exposure. The overnight dip on the data or on the release for China, this is what I was watching yesterday. And obviously, hindsight's 2020, guys. Me and Jamie were actually watching this live, sitting right by each other, and it was screamed by in this region. The only issue for me is that we kind of broke right through it, and then once we surpassed the lows, I was too shook to actually jump into the position here. Daily really wasn't a major key level that you ran into. Another reason why I wasn't really too confident on trying to get too active there on trying to fade this move. But long story short, things are changing here. And this is sort of the region I need to see break out now for the sterling, or for the euro, or for the Aussie rather, excuse me, to get more on the constructive approach. And it's still at 73.94 level. So for Aussie, I do largely want to see this thing move higher. Do I have enough conviction to put this as a scalp that I'm actually actively trading? No. So, we'll see how this pans out. Largely speaking, the reaction is very indicative of at least a near-term low being tested and defended. So we'll want to see if we can close back above that median line again, back above that confluence. And if we do, could be just a quick reset, false break, and a move higher. So just a quick note there on Aussie, guys. I'm not touching it right now. I know that it was featured on the intraday scalp on Monday and Tuesday, and it was a beautiful play into the lows, but now that we've been invalidated, I really would need a little bit more of a compelling trade here to get us back on the long side to try to fade this move. Aussie, just for your information, and Kiwi will have the largest impact to all this China data. It's the largest trading partner. They're both commodity-driven economies, so aggregate demand from China is a big player in their economies. And if a slowdown is materializing there, certainly that'll soften the approach from the monetary policy stance that each central bank is taking respectively. A quick look at the Kiwi dollar on the daily chart. Again, you're looking at a very, very clean-cut monthly opening range. I don't want to touch these until we clear it. With the Kiwi specifically, the opening range high is basically the monthly pivot, the monthly central pivot. The opening range low, previous lows that we made for the previous month. Yes, you're getting a flattened price action, not really divergence because there's no extreme in price, but the risk is for a break out of this region, and we'll wait for that break to give us a little bit more conviction near term on the Kiwi. All right. We will wrap it up there. Eileen, you're more than welcome. Mark, you're more than welcome. Chintan, Enrique, Nigan, Nuno, great to see you all in the room. Sharif, I will see you all tomorrow morning. Remember, 8:30 Eastern, we get the release of the retail sales print. Don't forget, today, 1 p.m. Eastern, Jamie will be on with the weekly strategy webinar to go over what we're looking at on a little bit broader of an approach from the swing side of things. So don't miss that. Best of luck trading, guys, and we'll see you tomorrow. Cheers.